Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now market preview event. Hello there, Cora Tim. Good afternoon, Bacon Dude. Good to see you guys. See, we've got H&C in the house as well. Good afternoon, H&C. Hey there, Matthew as well. Good evening to you, sir. Around the other side of the world. Got a very diverse group of people in the room right now. All four corners of the world. Hey. So, everyone get a good weekend? Good couple of days off? I hope so. You worked the weekend? Oh, mate, no. Sorry to hear it, man. Oh, no way. We got two workers. 2 weekend working warriors. Off from tomorrow. Last night tonight. Radio. Oh, well, I'm sorry to hear about the work, guys. That's not ideal. I suppose it's got to be done, though, sometimes. The work never ends when you're a parent, so yeah. Had the little brats, and yeah, it was a good weekend though. I certainly won't, my friend. I certainly won't. Alrighty, well, let's get cracking on then with the market report breakdown and the preview this week, so we can get Bacon Dude back off the bed. We've got a few things going on this week from the economic point of view. Of course, we do have the CPI out this week after our complete non-impact event from the non-farm payroll on Friday last. And we do have the CPI, sorry, as I mentioned this week. That's core and base CPI for the United States. We also have the Canadian dollar interest rate decision, and we also, on top of that, have the ECB as well. So there are a couple of things happening this week that could be driving market sentiment on top of course, the ever-developing geopolitical factors. Now, looking at what we have got in the market so far, EU50, the Euro NZD, natural gas, and gold this week. The EU50 at the moment's got a break close and a retest beneath liquidity, trading now back inside the daily range. So my belief here is that if we do successfully retest and break structure of the upper limit there, then we could see the continuation over the next week or two all the way back down to the previous lows where the imbalance has been filled and the market is continuing on its original trajectory. So maybe looking at the EU50, of course, trading back down at that, those lows down there, which would be a sizable move. Now, of course, I don't believe this is all going to happen in 1 week. I don't think this is going to be a Monday to Friday trade idea. It will probably be separated across a couple. Even though we've had some pretty sizable moves in the past from commercial players down there, it usually has been the buying that's been significant. The selling has been slow. So I'm just trying to take historic evidence and price that into what our current bias could be. But nevertheless, pretty decent trading margin out there, guys. So definitely keep your eyes peeled on that one. Now, looking across at the Euro NZD, obviously we got a great call on this last week. That was a really nice trade idea. It actually exploded as well on top of our initial trade idea. We got a beautiful imbalance which was filled, came right the way back up to the commercial high there. And now from this point on, I believe that now that the orders have been filled, we will see that continuation back down to our next point of call, which is at this area in here. We may well see the lows being achieved, but I'm not looking at sort of 3-week timeline. Which it could take up to, maybe 2 to 3 weeks to get all the way back down there. Again, this could happen. This could happen tomorrow. Something might happen. This could happen tomorrow. We've got the ECB this week as well, of course. It could sink the euro against the New Zealand dollar. We could look at the market trading back down there, like no time at all. But based on historic evidence, the bid has been very strong. The sell-off, the short, has been a lot more relaxed, I would say. So it's nice to price things in nice and slowly. And potentially looking back down to around 1990 to even lower than that. But again, nice trading margin there. Looks like a solid trade idea. Moving on down then, next up to our energy markets. We've got natural gas. Natural gas this week. I'm not looking for anything too explosive. Very modest trade idea in comparison to obviously the EU50 and the Euro NZD. Looking at the market trading between the breaker structure point and liquidity below there, it's only a few ticks really down to the low, but it's going to be a really nice intraday trade. That's what I'd be looking at. So we've got a real decent breaker structure, follow the momentum right the way back down to the previous lows, you guys should be walking away with a relatively decent trade. And that's off the back of a really beautiful call last week as well, where we took, sorry, it wasn't last week, it was the week before last, where we took that decent long. And so last week we didn't get anything at all. It was relatively stationary, you know, just kind of moved along sideways. This week, I believe, is the week where we're going to see that sell-off come back down into liquidity and then go up from there, maybe in the following week. And then finally, we've got gold. And I mean, as I've mentioned here, gold does indeed remain under heavy pressure at the moment. We're not really seeing the higher highs, higher lows here. It's struggling. Lower highs, lower lows, in fact, have been formed over the last couple of months. And we're just about to break big liquidity here, guys. And make no mistake, that's a big deal. So once we break through the floor, my bias is the previous low, which is going to be this point in here, which is the bottom of the wick before we got that big commercial bounce. And so it makes perfect point to get back down there again. There's going to be orders in the market. We already know that. So it's the logical place for the market to reach next. And it's a decent trading margin in there. So, I mean, natural gas is probably the most flaky out of the three, but between gold, Euro NZD, and EU50, we've got three really strong trading margins. It is purely a coincidence that all three of those are short. Even natural gas is short, so all four of the damn trade ideas this week are shorts. It is purely a coincidence, but it's just the way they've set up. It is nevertheless looking really, really good. So keep your eyes peeled on all four of those. Now, looking over at the market challenges this week, as I said, we've got core inflation, base inflation, BOC, and the ECB events. The interest rate decision for Canada is looking at the lowest impact to what we've got going on this week out of all of them. So core and base inflation, 7 and 6 out of 10s. We've got 2 out of 10 for the BOC IRD, and then the ECB event is registering as a 4 out of 10. But even looking at the CPI at a 7 is, you know, on the kind of edge of it not being a huge event. A 7 out of 10 is going to be big enough. We'll definitely be able to get a couple of 1-minute scalps in that, 100%. But, excuse me, coffee time. But at the same time, of course, we're not going to be looking at that next level kind of, you know, volatility breakout that we do historically love. That we don't seem to get too much of nowadays, nevertheless. But you know, it's not really what we're going to look at this week. So we're going to have to be quick on the trigger. Now, moving on down to the SSV, there is a whole lot of absolutely nothing to talk about. And that's all I'm going to say. There's literally nothing to talk about. Natural gas has come down about 0.5% from last week, maybe 1%, but it's still looking very bid. Gold 48.90, it's right there in the middle, you know, and the rest of them are as well. VIX has risen maybe 0.5% from last week. There's nothing to talk about here, guys. These markets are incredibly balanced at the moment, so yeah, not much to say. Now, moving down into the economic and order book impact report, CPI core at a 7 again. The US base is at 4. And we've got the BOC, which is registering as a BOS in this for some reason, is registering as a 3 out of 10. And we've got the ECB at a 4. So, again, very, very sort of, I don't know, kind of on the fence economic data apart from that core inflation rate, which is the 7. I mean, the US base inflation at 4, that's going to be a non-impact event in terms of broad market impact. Looking at the core inflation, that's the one that we're all going to want to keep an eye on. And just to confirm, I did say it earlier, but I believe... Okay, it's Wednesday. Yeah, Wednesday. Wednesday afternoon. So that's when our live CPI trading event will take place. All right, so if you can make it, please do try. Do try and be there. Hopefully it'll be a good bit of fun. Now, moving on down, multi-asset impact gauge. We've got 35% of the impact going to the Forex markets. 15% is only touching commodities. And then we've got equities and indices, both at 25% in terms of impact this week from the fundamentals. In terms of our MFT here, We've got 54% bid in indices, bonds, fixed income markets are balanced, so are commodities. Nothing to talk about in those two. Indices being totally bought, 54%. Probably worth a little bit of a shout out there. Might move against our EU50 short idea, looking at how much money is long in the indices this week. So just take that into consideration. Moving on down to the equities, we've got RKLB, PILB, P10, and HL, all of which look pretty good. The spotlight equity of the week is MP Materials, and this remains one of the most interesting strategic plays in the market and is a rare earth minerals equity. Now, as it happens, this is no coincidence that in the institutional buying interest by sector, minerals this week takes the number 3rd spot in terms of most hedge fund investment. $2.7 billion invested by hedge funds over the weekend in minerals, which means this, over the next couple of weeks, should look pretty tasty. Please go and have a check it out. And that's about it, guys. That's where we are this week with the complete overview from the market reports perspective. Now, before we get on to leveling up with our US indice analysis for you guys, I am going to give you the most exciting rundown ever of a disclaimer. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. Past performance is not indicative of future results. So please, if you're interested and need to do so or want to do so for whatever reason you may have, go to our website at www.utc.com/T's and C's, and you can go and get all that good stuff yourself. And yeah, good luck with it. Right, that's the best part of the show done. Let's get going over to TradingView and check out the charts for this afternoon, team. Right on. So let's start off from the top. US 30 Dow Jones daily time frame looking bid at the moment, isn't it? Let's go to the 15. Certainly had a little bit of a bid today. Don't really want to be recycling any of these zones. Looking a little bit tired now, isn't it? So let's get rid of this. There we go. Right. Okay. So clean slate. We've got a floor. We've got a ceiling. Definitely. These are the margins I'm going to work with. Don't really want to care too much about the all-time high up there. It is these two margins that I'm going to be focusing on. So as we can see here, based on this margin, we're trading slap bang in the middle of nowhere, right? Which is a little bit frustrating, I must admit. That being said, we are going to work on some part of the process here. So we've got a break of structure point going across here for a long. And we've got the, trying not to spill my coffee whilst doing this, exact break of structure point in there for the short. So then we look at a long to target up at the highs, bring that across, stop loss at 1 to 3. Excuse me. Right, that's going to be about there. Bring that in, bring the stop loss down around to 1 to 3 as well. And those are your two US 30 Dow Jones trade ideas. If the market breaks out long today, we're going to have to give it a pass, because it won't do it in time enough for us to be able to take it before getting to the dead space at around 5:30 p.m. this evening. So download. Right, next up, NAS 100. Even better bid today in the NAS. An even better one. So delete some of these old things here. To be honest, I'm not going to delete this one because I'll probably have that back in there in a moment anyway. So that's actually quite handy. Don't need it as wide as it was though. Yeah, so that's a big point of liquidity up there. Definitely daily break close retest. It's a failed retest on that NAS 100 as well. Would anticipate the market making it all the way back up there though. Probably a lot more orders in the market. And then coming back down, we've got highs and lows. So could we say about there for the continuation. Is that a possibility? I think so. Breaker structure for this trade idea is uncomfortably at about there, I would say, at 29.52. If the target profit for this one is going to be about here, which doesn't really make sense, because that's the point of inflection, isn't it? And that is a really nice one. Yeah. Not sure, to be honest, team. Don't really want to... Well, I don't know, actually. What is that? Let's have a look at that on a 1 minute time frame. The 15-minute time frame can sometimes be a little bit deceiving about just how much of a margin is between those two. So, yeah, looking at that, see, that's not too bad. We could probably get the entirety of this move inside this margin here. So, if we just go back to the 15... I mean, we're looking at some real short little breaker structure points there. So looking for the rally first, rejection from the high into the trade, targeting this area in here. Stop loss 29.57. That's going to yield a 1 to 2.7. So not too bad with that. That's not too bad. Going to go for that one as well. And then it would be really good to try and get some long availability on the S&P, because we didn't get that on the NAS 100. And judging from what's in front of us right now, it does look like we're going to be successful in doing so, which is great. So we've got liquidity above price action. That's going to be about there. Yep. We've got the breaker structure for this, which is just above where price is trading at the moment, about there. And then the trading opportunity will sit between those 2 points. So we go down to the 1 minute time frame. Whoops. We look at the long target and the stop loss. Now for this trade, you might want to wait. Yeah, actually, no, I wouldn't worry about it. I wouldn't worry about it. Yeah, so probably go for around that for the S&P trade for a 1 to 2.5. Which isn't bad. That's definitely not bad. Not bad at all. For a Monday afternoon, I tell you what, for a Monday afternoon, this is not bad. I don't feel like we're at loss at what to do on any of these. The US 30 Dow Jones is definitely the nicest setup of the three, but the problem is the damn thing's trading in the middle of nowhere. That's the downside. But yeah, for all intents and purposes, the rest of it looks pretty good. Now, let's just have a quick rundown of the rest of things. We've got the break close retest necessary for NG. It's not there yet. UK Brent, US crude. Possibilities. Yeah, possibilities. Most definitely. But again, we're not quite there yet on those. Gold market. It's not really done much of anything today. Gonna have to wait until we get a few more hours into the week before we see what that one's gonna get up to. This one's done really well to the downside. This one's absolutely sank. Come back for a little bit of a price action pullback now, but yeah, still looking very good to the downside. Very good. Yeah. Yep, very good to the downside. We're not ready yet. I am going to pop an alarm in at 197.52. Just give me a heads up. If my alarm triggers, I will, of course, be posting out the idea. But until that time, I don't feel it necessary to... We'll just take that step by step. Right, ladies and gents, I am going to wrap things up there. If you've got any questions or anything, now's your chance. Alternatively, please feel free to post them into the chat, and I will get back to you ASAP. We are coming up to the top of the hour, so you guys have got about, 35 minutes to go or so before the bell rings. Good luck out there. Remember, it is a Monday. Mondays can be very temperamental. It's not about making all your money on a Monday afternoon. Usually it comes Tuesday, Wednesday, Thursday. Best trading days of the week. So on a Monday afternoon, we should try and take it easy. But there are some decent margins out there. So let's just, take it slow. Let the market bring the opportunities to us and trigger as appropriate. We have a plan. The plan seems pretty good. So let's just follow that plan and see what happens. All right, guys? Good. Right. Take care. Good luck. Trade safe. And I'll catch up with you later. Thanks, team. Bye-bye.